think about the panelists we have, the one thing they have is a completely different regional perspective, which we're going to dig into. And I think that's a good place to start, really. There's been a lot of shifts going on in the VC community, right? And I'm going to throw this out to Harry first, because Harry's come a long way, and he's also been in the venture capital community for a long time. And there's been a lot of stuff going on. Harry, from your point of view, and I know you have a specific regional focus, let's start off by outlining the headline shifts that we're seeing in the venture capital community, and get the conversation started that way. How do you see it?
Yeah, it's a very good question. Especially in the past several years, I think the whole venture capital industry has shifting quite a lot in terms of the technology involvement, in terms of the exiting, in terms of the geopolitical situation. But something I witnessed hasn't been changed in the past 20 years is the involvement of digitalization around the world. I still believe we witnessed the involvement from mobile industry to the EVs to nowadays the AI. So a lot of exciting things are still going on. And one big change is that also the opportunity I see is that the geopolitical thing has really evolved between two big countries, China and the US, which do create some obstacles for venture capital industry in these two regions. But one big thing I want to emphasize is I see the globalization is going on in a different way. One thing I want to emphasize is the venture capital is not only US and China. We began to see venture capital in Middle East, Europe, Southeast Asia. And we see more and more collaboration between different countries, and the technology involvement is happening around these countries besides China and the US, which is very exciting.
And Abdullah, when we spoke on the telephone, you were talking about the dynamics of this region, the MENA region. We've got new entrants. I mean, you're very, very much focused on certain things, but we've got a lot of new entrants. All of a sudden, large communities, capital communities, such as the Kingdom of Saudi Arabia, are waking up to the idea. Give us a local view on how you see this region shifting.
Yeah, so I'll be talking today with two separate hats. There's the family office or the family business hat, where I'm a board member. But several years back, I founded, together with my co-founders who are also from a family business background, the first venture capital firm in Oman, Face Ventures. And back then, as many of my panelists I'm sure are going to talk about in the region, UAE and in particular Dubai was the hub of VC in the region, and that's where all the action was. And it was also very direction, where most family offices were one way investing into like US or maybe a few of them into Asia and China. Fast forward to today, Saudi has emerged into the scene. There's homegrown regional businesses that are very interested very interesting for investors, both as VCs and family offices. So it's actually reversed money flow, and we're seeing, Sequoia India invest in their first couple of deals that are regionally grown, with Tabby and Husby. You're seeing, of course, a few years back, the exits out of UAE. You're seeing, PayPal Ventures invest in the region, and so it's now this very multi-directional ecosystem with much more, many more players. It's not just Dubai anymore. Saudi is here now. To some extent, Oman is here, and so it's interesting. It's becoming more global. And that doesn't just mean where the investors are, that also means where the founders are. And the family offices are also more interested in what's happening regionally. It's not just a one-way relationship with let's send our money to Silicon Valley, or let's send our money to London or China. It's also let's allocate with a global view, and also let's allocate with a regional view. So that's definitely new, and I would say even in the last 2 to 3 years, is something that's a recent, very recent development.
Yeah, it makes sense. And Victoria, you commented last week where there is a significant amount of inbound, fund activity setting up here on the ground here. That's going to have an effect, right? It's going to be more competition on the ground. There's going to be more competition for capital, more competition for deal flow. How do you see some of that playing out?
Yeah, I guess, we're one of those businesses that has seen so much value in the UAE and broader GCC that I moved here about 18 months ago now, and to build out the business that is originally headquartered in Singapore. At the end of the day, I think there's more than enough for competent funds to work together and has enough competition, and there's more than enough capital around here. So it's a bit of a Hunger Games and the best man win type of vibe. But no, it's super interesting, and there's been, constantly discovering what's in the region and echoing what you just said in terms of the startups in the region. Before, that was never something that we looked at. It was always outbound or people investing on the West Coast from the rest of the world. And now people are looking at opportunities and deals locally. And it's a really interesting dynamic shift in deal flow and deal access.
And Arif, when we spoke, you think that the venture capital sort of sector in the region is underexploited. There's a lot of opportunity in there.
Of course, yes. If we go back post 2008, post the crash, we have seen a lot of change and direction of families that they created their own VC arms, and this is a major shift in the competition, or basically in clientele base of these VCs. So they lost it, and now they became partners, basically co-investors. So for a lot of VCs, it was a risk of continuation. So it's by force then let these companies to go to these this direction. But in terms of opportunities, yes. I'm coming from the past 25 or 30 years, been working in the private equity and venture capital. So the first, we can say 15 years, I worked in the private equity. And then after 2008, basically I shifted towards the more VC. And I can see the opportunity, especially when I moved to the UAE 2017, was asked by the government to establish something for the Dubai government as an investment arm, because as an SME, from the previous panel, when I think Tariq and Omar mentioned about the lack of liquidity, like banks, they don't give financing for the VCs because they have to be profitable, and so it's not like if you go to US, Europe, or Asia. In the GCC, it's more about collateral. So no bank is financing startups. Zero. It's not even 1%. I mentioned 1%. I think it is for the companies that they have collaterals, even though that the company is in a growth stage. Still, they will ask a lot of personal collaterals, which is defeats the concept of VC. A lot of startups, they fail in the initial stage. 80% of them fail in this region because there is no financing. So the reason we have created this sort of an investment arm for the startups. Even the government, they have a fund. They are supporting the SMEs. But the problem is that by decree, they have to finance the local companies. And we couldn't find, when you filter these companies, couldn't find good companies to invest in. So we needed to be part of this investment decisions. So we've created this as an investment arm to become part of the, we invest in the companies, even we finance them. So basically we are securing the finance, we know where the cash is going on, and also we're becoming part of the board and the management. We're directing the management. So if you see that the founder is more technical, And the next stage, like next round, is going for like a ideation. After the ideation stage into MVP, we find him he's not suitable person. He become part of the board, and we recruit basically a new CEO for the company to make it to the next stage. So we found that there are a lot of opportunities now coming to the area here. From my experience, that last 3 years, I personally went through due diligence of more than 350 companies. We invested in 7 companies. So we see a lot of these opportunities coming from everywhere, like we have seen from Europe, from US, from Asia, from China, from the Middle East here. Now we can see a lot of the local, especially talking about the UAE. You can find a lot of people now, they are shifting towards non-real estate, non-stock market, so they're focusing more towards why don't I establish my own company and food business. So we are trying to basically direct the focus of these people. Come, I'll put money with you, but give me an idea that is more disruptive using technology. So in any sectors like technology, being in AI, being in fintech, legal tech, and health tech, and all of these sectors.
So Harriet, in your view, has things changed post the pandemic and the geopolitical uncertainty that's surrounding us all? Have you noticed any changes in the last few years with this community, the VC community?
Yeah, and it's really interesting to borrow Harry's word at the AIM Summit the other week. He used the word decoupling, right? The world is going through a decoupling phase with the global tensions. And when you add that to the back of a pandemic, you add that to an environment of high interest rates, high inflation, global tensions, it creates a very dire picture, right? And, I think, if you look at the statistics around VC at the moment, the performance, the deal flow, it's tough, and it's been a tough few years. But I think we have to remind ourselves that if we think about the last period where we were really in a down market with the 08 crisis, that actually so many companies were born out of that period, right? And you have the Ubers of the world, that the pressure that the economy created actually drove innovation, it drove ideas, and a lot of these green shoots were formed. So I think, the last few years it's been really challenging, but I think on an optimistic viewpoint, we can look to see grown out of this environment at the moment some really exciting businesses that look at how we can do it differently, that challenge the way that we operate, and really fuel that innovation. So I think a lot will come out of this period, even though at the moment it's quite hard.
Yeah, it's interesting. I mean, when we spoke last, Victoria, the thing that struck in my mind was that there was a time when the region was investing merrily in US opportunities, but you were seeing there's a complete reversal where there's more capital sort of seeking home here. Follow up on the comment that the data you mentioned is really a revelation.
Yeah, I mean, when we were talking about having our call, we were discussing Hatcher runs a data-driven approach to strategy to venture in many ways, and a really cool software platform has come from that. But in terms of the analysis of originally, to run our historical analysis, we bought about 600,000 venture points, and they were 90% led by US VCs, because that's where the VC industry in the world was historically. And we ran a few billion portfolio simulations to come up with the right number of how do you do a more diversified or smart beta approach to venture within a strategy. And initially, and now we're at 270 investments, it used to be more than 50% US, if not in the 70s or 80s, in terms of early stage investments. And today, that number's at 40%, 45%, which is still, the biggest one out there, but it's much, much lower than what it was 3 years ago, and at the outset of this strategy that we've built.
And Harry, your focus, very much, Asia, sort of Chinese specific. But you were mentioning that you felt that China needed to be here, but also to have a more global view of exploiting these opportunities. Can you expand on that?
Yes, it's very interesting, especially during these challenging years. I suddenly realized everything comes together. There is a very strong push on deglobalization. People call it deglobalization. But it's very interesting. In China, the entrepreneur, because of the deglobalization, they began to think from day one whether they need to have a global business. So previously, they can easily do their business in China, grow it for 10 years until it's become a giant. Then they consider whether I can do global business. Example like the drone company DJI, right? They successfully do their business in China, then began to go overseas. But nowadays, I see a lot of Chinese entrepreneurs. From day one, they have 2 offices, 2 headquarters, or 3 headquarters. One of my IoT company I invested, they have more than 50% of the business are from Middle East, to my surprise. So when there's a pressure of so-called decoupling in politics, but the culture, humanity, and technology never decoupling. So I think for the next 10 years, there will be much more collaboration between China, not only with US, but also with Middle East, with India, with Europe, and South Asia. So this trend is very strong, from my point of view.
Yeah, I think there's a lot of powerful moving parts, isn't there, in the industry coming together. And I know that both Arif and Abdullah, you were commenting on the need to bring in fresh thinking, fresh blood, new ideas into this market and VC generally. Abdullah, expand on some of that thinking, because you were quite forceful about that.
Well, yeah, I mean, VC is all about fresh ideas. But actually, I wanted to segue a little bit off of Henry's point about companies kind of day one thinking global. It's a similar story here in the region. We invest regionally, we invest internationally. But what we're seeing now, especially in the technology space, is pretty much day one, companies aren't categorizing themselves as I'm a Saudi company or I'm a UAE company. And actually, when we're investing, especially regionally, we actually shy away from those who have that mindset. We're looking for someone, we're looking for teams and we're looking for founders who are day one thinking global. And if you're solving a problem that is a global problem, it's probably a scalable problem. And if you're not, I don't know, it could be scalable depending on how big your local market is. But yes, the geopolitical environment is shifting. Luckily the Gulf has remained, fairly friendly to all, the East and the West. And so, we're not maybe directly impacted by that. But technology is universal. And if you can solve a problem that, someone in America needs to solve, and someone in China needs to solve, and someone in Russia needs to solve, and someone in the Middle East needs to solve, that's the kind of problem we want to back. And so, sorry, I'm not answering directly your question, but that point is something we've been thinking about a lot in our investment thesis, is, thinking global day one and solving, problems that are universal problems. And, regionally, 5 years ago or 10 years ago, founders were, first-time founders were trying to solve for the problems that they saw in front of them in their local markets. But, as the ecosystem has matured and we're on second-time founders, third-time founders, they want to go bigger and better. So now they have a new mindset, and it's kind of global day one, and we love that.
Arif, building on that, because I remember you saying that, in a sense, not taking a risk is a risk itself. So you're quite passionate about bringing new blood, but also trying to break with a lot of the tradition to get things going?
Yes, yeah. Actually, when you build a fund, you have guidelines for these investments. So Usually it goes around like certain sectors that are not available. Like, for example, if you're developing this ESG-based like technology, so you cannot find always the investment that you want to basically inject your capital in. So if you're not deploying by itself, then you have a risk also like depleting basically the capital. The good thing is that today we are introducing like new ideas coming to the region here. That's why we're in venture. So we're talking about something to non-classical way of doing investment. The concept is that today I have multinationals, they have sometimes off the shelf, they develop their own concept and they have R&D. They have a lot of these projects. So basically, when you approach these people and take that concept and develop it into a project and basically sign with that company, tell them, I'll develop the project for you while you're taking an offtake agreement. So it's basically, this is a VC with an offtake agreement. So basically, I'm reducing my risk from day one. So this is where I can see that this opportunity for me, like I didn't see it like previously, that if we are bringing this concept from US to the region and then expanding it, I think we will have like an edge to what we are providing as an opportunity to families, even to the VCs today. So we are working in collaboration with these people instead of just another VC coming in with the same concept with a team of intelligent people putting a concept together. And the problem with the normal VC, you'll always need a cash. There's different rounds, different series. And the problem that you cannot find these people always there. 4 months ago, we lost one of the investments because the board or the shareholders, they are not interested to come into Series A. It's enough for us. So major shareholders, they said no. Then basically even the small investors coming in, they will not cover the next phase. So that company went for fire sale. So it's pity, you see that there's a growth. But with these new concepts, when you have there's an offtake, partners coming in, and instead of competing with each other as a VCs, why don't we collaborate? Why don't we create today, we say, there is a line between a VC and a private equity, and this line is the growth stage. So if we are putting this creating something for the private equity that tomorrow they can take my product, why don't I create based on the criteria that, so this is creating an exit strategy for me. Instead of maybe they will find somebody. Now I'm creating for company 1, 2, and 3.
Yeah, makes sense. And so let's change tack a little bit. It's not really a curveball, but Harriet, what's the state of the startup landscape on the ground here? Because that's quite relevant. We see lots of entrepreneurs coming into the region trying to raise capital, but what's the state on the ground in the GCC?
Yeah, I mean, interesting question. And for me, I came from the startup world into VC, right? And have worked for a couple of startups in the region. And, it's still a really young green community, right? Which in many sense is an opportunity. I think, there's still, that emerging market mentality that we have the ability to leapfrog here in the sense of we're not burdened by, a lot of legacy systems that many markets are. So, for example, in ag tech, we don't have a agricultural sector here. We can go straight into vertical farming. We can go straight into addressing food security issues. So I think, the status, whilst it's very young and underdeveloped, also brings a lot of opportunity. And I use, again, that leapfrogging mentality that is really exciting. I think, though, as well, with the sort of greenness of the industry here, it also brings some challenges, right? And, connecting startups to investors, for example, especially startups that are outside of fintech, who don't have financial literacy, who don't have a network to sort of raise funds through. How do they do that? I have so many people come to me saying, can you introduce me, because I don't know anyone. So how do we bridge that gap as well to feed that ecosystem to ensure that startups have that support? And you see incubators and different programs starting, which are essential. But also we start to see this funding gap. If you're a startup today, you can raise money through your friends and family up to a certain amount, maybe 100,000 or 200,000. But then there's this gap up until sort of more 1 million, 2 million, that who's coming in with that next ticket to really ensure that that startup can grow into that next phase. And for example, when you look at VC ticket allocation, 5 years ago, 85% of the tickets were under $1 million. Now today, that's sitting at about 48%. So you can see for VC, the ticket size is getting larger and larger, which is only going to leave this gap even greater for these startups. And maybe this is an opportunity where family offices come in, who are just that bit larger in their ticket size through the angel investing, for example. So, when I look at the state of startups now, it's, there is that a lot of opportunity, and the advantage of being in an emerging market and access to Africa and, the rest of the world.
And how do you see it, Victoria? I mean, do you share those views? I mean, you thrive on seeing deal flow and thinking about, as we all do, who might be interested in that deal flow. How do you see?
So I think with us, what's been interesting, and I echo quite a bit of what Harrod said, but in terms of like the deal flow, and there are a lot of startups emerging, but it is that little gap of the first 50K and who puts the middle $500,000 or $1 million. And actually, Arif and I were just talking about that outside earlier. It's been an interesting kind of journey for us in terms of the technology that we've brought in and analyzing like 500,000 deals and being able to kind of assess the various stages. And we work with accelerators from around the world and venture firms and do co-investments as well as allow direct investments. And where we've found a very interesting piece of feedback is we thought we'd be pushed out of deals, but when we approach people for a kind of early stage ticket and co-investment, there was a lot of positive feedback or doors opening as a result from said accelerators. So I think, as you referred to accelerators, you didn't refer to that, but accelerators don't necessarily put cold hard cash on the table, right? And that's what a lot of these startups are missing to get from that formation stage, seed stage, through to their Series A and like a deal discovery opportunity platform to weed out the ones that are successful or not. So to your question, Nick, I think there's a lot there, and I echo Harrod's points, but it is that there is a funding gap at some point, and where do you fill that? I think we've seen a lot of benefit from that piece of the pie or the
it is interesting. There is both. We have an enormous volume of entrepreneurs and founders approaching myself and Obi and what have you, and they say, "Well, you know how to navigate the Middle East. Can you help us?" And I think our network is very much family office driven, and that's where it gets quite interesting. So my sort of follow-on question is what to Abdullah really, where we were sort of talking about the traditional investing and the opportunities, but now the new innovation is coming where your words were, I feel like I'm cannibalizing my investment portfolio. Can you expand on that?
Yeah, the previous panel was also an interesting one to see how second generation, third generation, etc. The younger generation of family offices are heading in new directions and bringing in new businesses into their portfolios. And so yeah, I mean when I dual hat, sometimes the mandates compete with each other a little bit. And yeah, when we were having our pre-call, I referenced one instance where, you know, Phase Ventures is invested into a business which, at least at the beginning, maybe it ends up being a partnership, but at least at the beginning was competing with a business that's, you know, part of our family group in Oman. And so it's interesting to see that, and I think what we'll see more and more is family offices realizing that actually, you know, focusing on, you know, getting involved into the startup ecosystem, and as you said, I think a great place for them to think about getting started is looking at, you know, some of these early stage opportunities, although I would caution direct investing without, you know, having a good team in place. Because I dual hat, I can say that. I am a family officer and I'm a manager in the VC space. So with all due respect, I would say, you know, I think, you know, you need to have a strong team in place, but not just investing. I think more interesting than investing for family offices is actually collaborating with these businesses. And I think something Arif mentioned is this idea of, you know, building ventures where, you know, you already have offtakes and you can grow together. And I think that's a place that family offices should get involved. In the instance that I'm referencing, that's where the direction it's kind of heading in now is like a partnership direction where they're like, okay, well, you could disrupt my business. Why don't we work together instead? And, you know, we'll help you scale. We have access to clients, but you may have a better technology than us. And, you know, we acknowledge that, and maybe now we become partners. And I think that's an interesting place. Like if your family business is in, you know, whatever, e-commerce, you know, commerce, let's say brick and mortar commerce, and there's interesting e-commerce opportunities. It's not just about investing, although there is definitely room in that bridge, you know, between angel and where the VCs are now with the bigger tickets for family offices. I think more interesting is for them to actually start working with those businesses after the angel rounds, once they have a product, see if there are opportunities to partner. I think that's a great place for family businesses to think about. And then, you know, if they see success commercially, they can always then have, you know, like a first right of refusal to invest in the next round, or et cetera.
And in a sense, Arif, do you think that, you know, because the venture capital marketplace here, the sector is still developing, are they more directly competing with family offices, do you think, on the ground here?
Currently, yes. Yeah. We have witnessed this like previous 2-3 years that basically we're approaching some family offices with like a new tech investments, like for example, health tech. We found that most of these families, they have their own health tech because some of them, they own hospitals, clinics, and these things. So we found it so difficult today, like to offer these families because they have access to information more than us. Because imagine that his family business is sitting there and he's receiving on a daily maybe tens of different deals. So he has more information today than even us as in a VC. So the way out is basically to do like a co-investment, collaboration, because we have seen a lot of health tech applications and telemedicine. And a lot of them, they are very small in terms of concept and what they are offering. So if they are basically consolidating and providing us one-stop shopping for these either hospital or clinics, I think it will be, they'll have a fantastic product, and it will reduce the risk of competing, basically. Reduce the failure of both, because if you're weak and I'm weak and competing in the market, both of us will fail.
Yeah.
So we have to join our efforts, forces together and reduce the risk of like, when you're competing with somebody else, basically, you have to put a lot of marketing expenses. So why should I put all of these?
Yeah, it's interesting, isn't it? Because I certainly know that a lot of the conversations that I have with, you know, funds looking to get access to capital here, but at the same time, I've noticed a lot more family offices are, as a limited partner, are more representative than ever before in the VC. They often sit on the investment committee, which I thought was quite interesting. I mean, how do you see that sort of, because there's a couple of gaps here, isn't there? We've talked about VCs, and we've talked about families, and you talk about angels. There's missing elements of the ecosystem. And now we have the families wanting to get more involved in the coalface. How do you see that playing out? You know,
You're asking me. So, funnily enough, that's what Arif just said and what you mentioned. So my other hat, similar to you, which isn't a hat I'm currently wearing, but I'm part of a family office as well. And within that family office, we have a venture fund. So what you said is that family offices tend to often go direct at times now when they know what they're doing, obviously, and they have much more knowledge than before. And we've all heard this statistic in a version or another over the past few years that family offices used to allocate less than 10% to venture and PE, and now it's in the 25 to 35% of their portfolios. And so there's definitely much more knowledge, more direct access that's wanted, and not necessarily having to pay an external venture firm, given that they're acquiring the knowledge and building it in-house. Such is what I'm seeing a lot in family offices.
Yeah, and it's not like it's by choice. No, it's a must, because today the new generation coming in with new ideas, with new technologies, they want to basically, they don't want to work in the traditional business. And that's why you see 2-3 families, they have as a VC fund in DFC, for example, and tell them, okay, this is go and basically exercise, do your own projects. So basically, for the big families, it's a learning curve. But for us, it's a competition.
Yeah, it's interesting. And Harry, I mean, you saw the evolution of the VC market in China. Are there any parallels between what's happening here and what you saw in China? Because I know it's happening on a bigger scale, maybe. But
Yes, I have to say the past 30 years, VC development of China started with 10 US brands come to China. And the really pickup starts from the ecosystem is built up, which means people understand more about what is the risk they are taking, what kind of impact they need to invest in. And also, there is an ecosystem built up among the venture capital, PE, family office, government, and the capital market exits. So all these are helping the past 30 years development of China technology development. What I see here is very exciting to me. First thing is a very strong alignment in the technology side, which means that the land here do not have too much legacy, despite of a lot of resourceful elements in this ground. So there's a very strong alignment, at least to me, is on the technology side to build the future of this land. And second thing is, I never see a country besides US and China have such big dedication or efforts on technology. I heard about the news that there is the first AI university built up here on this region, right? It's phenomenal, you know. To me, it's the big efforts and determination. So, and also, its location. It's close to Europe, it's close to China, it's close to Russia, it's close to Africa. So the position itself built up a mentality to collaborate with all the technology and the resources around the world and the talents as well. So all these makes me believe it's the starting of VC for the next 10 years. And I want to add one sentence is that it's not that clear, it's not that consensus yet, but the VC business, the charming point or the alpha comes from non-consensus or unconventional. Because all the sentiment around the world is about decoupling, slow down. So that's actually the blood of VC business itself.
Yeah. And Victoria, I mean, if you were to be asked, you know, what is the best way of setting up a fund here, or is this the right market for raising startup capital? What would be your advice to people wanting to come into this region?
So I'd say there's probably people who've been here for way longer than me that have a better answer to that. But we've been trying to figure that out. What is it creating a fund structure in Abu Dhabi versus Dubai, creating a fund structure in Singapore, in Cayman, in Luxembourg? And it's always been a really interesting kind of feedback loop in terms of it depends on LPs, it depends on the VC structure, it depends on what you're investing in. I think setting up funds here is getting easier and easier, but it's at the same time, it's moving so quickly. And I think the enablement and the regulation around it is something that is progressing super quick, and that's really exciting. We have originally the ability to create a fund structure in a day in Singapore, and that's one of the biggest things that we do. But this is the whole point about family offices being able to go direct. So we have family offices that reach out and say, I need to make a direct investment. Can you create something overnight for me? And that's something that is historically very difficult to do. Creating fund structures where you get bank accounts, administrators, auditors, all the back-end stuff, which is not the fun stuff that none of us want to do, but is absolutely essential in the business, is complex. And I think the region is really looking to make that more streamlined and easier to bring more of this capital to the region and being able to deploy more capital from here as well.
But it's the place to be, right? I mean, we all agree, every panel, this is the place to be. It's happening here and now. It's vibrant. There's lots of activity. And time's up. Thank you very much for this discussion. Very enlightening, very insightful. Give them a round of applause.
Thank you.